It's Monday, the 9th of August, 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Sean Aylmer. The Reserve Bank wants to more closely regulate the payment system as tech giants like Afterpay, Google and Apple move into the space. That's our main story. Also coming up in today's podcast, iron ore prices tumble, but coal prices surge. COVID cases in New South Wales soar over the weekend, with the state premier aiming for a 50% vaccination rate. And just how much has the economy slowed? Then, stay listening for my chat about the best tech stocks to buy. But first, here's a brief look at markets. Wall Street ended close to record highs over the weekend. The S&P 500, led by financial and materials companies, rose 0.2%, while the Dow Jones Industrial Average was up 0.4%. The tech-heavy Nasdaq dropped 0.5%. The moves came after US jobs accelerated during July by the most in a year, and the unemployment rate fell, providing confidence to traders. European markets rose again on Friday, and the region posted 5 straight increases last week. It was the best week since March, on the back of solid earnings data and economic news. The S&P ASX 200 hit another record on Friday, climbing 0.4% to finish at 7,538 points. It was quite a week. The banks and Afterpay were the standout performers, with the latter finishing up 5.5%. CSL ended up 1.4%, while James Hardie and Woodside Petroleum both rose more than 1%. There were several companies hitting new highs last Friday, including Domino's Pizza, NIB Holdings, Sonic Healthcare, Pinnacle Investments and 28 Metals. In Domino's case, people in lockdown buy more pizzas. Makes sense. Oil prices were down over the weekend, and Brent crude is trading close to $70 a barrel. Investors are watching the rising number of COVID cases around the world and calculating that demand for air travel and petrol will drop. The price of gold also tumbled over the weekend, down 2.3%, and is trading around $1,760 an ounce. The Aussie dollar's at 73.5 US cents. And iron ore prices have fallen further over recent days and are down more than 25% from their peak 3 months ago, trading around $170 a tonne. It comes amid signs that demand for steel in China has weakened, in part due to the latest COVID outbreak in the country, and also because Beijing has asked steel makers not to increase output this year. It's triggered a fall in the share prices of the big iron ore miners in Australia. In contrast, coal prices have surged and have almost doubled over the same time period. The reason is a global shortage of coal, which, in part, is due to China banning Aussie coal. The Reserve Bank is pushing to change regulations around the payments sector and give the central bank more flexibility to regulate the technology giants entering financial services. Governor Philip Lowe said that non-banks holding customer funds should be subject to a licensing regime. He didn't nominate any organisations when appearing before Parliament last Friday, but some of the bigger non-banks in the marketplace are Apple, Google and Afterpay. Dr. Lowe suggested there needed to be more competition among providers of digital wallets and called for a review of the Payment System Regulation Act, suggesting a special licensing regime for payment providers. This really matters. We're talking about everything from whether or not Apple should be allowed to dominate the tap-and-go space, through to whether buy now, pay later groups like Afterpay need more regulations and whether consumers are being treated fairly. By putting his voice behind the cause, Dr. Lowe has pushed regulation of payments providers front and centre. The issue came to the fore last week when US giant Square bid $39 billion for Afterpay, and Commonwealth Bank Chief Executive Matt Comyn called on Apple to be regulated in the tap-and-go space because it effectively prevents competition in the space for people using iPhones. Clearly, the Reserve Bank wants to keep on top of the massive changes in the payment space, but it doesn't have the power to manage some of the big tech companies. Dr. Lowe, according to the Financial Review, said rather than regulating payment systems, it would be better if the Reserve Bank regulated payment services. Proponents of regulating non-banks in the payment system arena, and there's plenty of them, just got a huge boost. This could well change the debate. In a moment, the rest of the news you need to know this morning. In overseas news, Berkshire Hathaway, the business built by arguably the greatest investor of his generation, Warren Buffett, reported a 7% increase in net profit during the June quarter to $6.7 billion. Just to get some perspective on that, Berkshire made more than 9 billion Aussie dollars in 3 months. That's more than Commonwealth Bank will make for the full year. Profits across Wall Street have surged during the most recent quarter, up around 90% from a year earlier when companies were hit hardest by COVID-19. With just a few weeks to go before the United States pulls out of Afghanistan fully, Taliban insurgents have seized provincial cities as violence across the country escalates. The US Embassy in Kabul has told all US citizens to leave immediately, while the US is trying to negotiate a settlement that would include the Taliban as part of the government. Those efforts don't seem to be working. And the Olympics are over, and TV rights owner in the United States, NBC, is counting the cost. The media group paid $1 billion to run 7,000 hours of coverage across 2 free-to-air channels, 6 cable networks, and a new streaming platform. But ratings have been disappointing, averaging 16.8 million viewers a day, well down from Rio. According to the New York Times, NBC is now offering free ads to sponsors to make up for the shortfall in viewers. Locally, New South Wales Premier Gladys Berejiklian will offer incentives for people to get vaccinated as part of her plan to get 50% of the state inoculated, allowing easing of restrictions next month. Construction workers from southwest Sydney will be allowed to return to work from Wednesday, assuming they've had their first jab. Ms Berejiklian said allowing more people to return to their workplace and classroom schooling were her priorities. It's a significant shift in priorities by the Premier, coming after 581 people tested positive in New South Wales over the weekend. The numbers triggered tougher restrictions in some council areas in Western Sydney, where the case numbers are highest. There were more cases on the Central Coast in New South Wales and in the Hunter New England region. Deputy Police Commissioner of the state, Gary Warboys, said compliance remained a problem in South and Southwest Sydney, and that's where the case numbers are highest. The lockdown in southeast Queensland was lifted yesterday afternoon, although there will be ongoing restrictions and face masks will be compulsory for teachers and students. But Cairns went into a snap 3-day lockdown to deal with a mystery case. Premier Anastasia Palaszczuk said Queenslanders should expect that there will continue to be snap lockdowns in the state. Victoria had 40 new COVID cases over the weekend, all linked to 2 clusters. Premier Daniel Andrews said his government would open access to 200,000 doses of AstraZeneca to people aged between 18 and 39 years old. And Federal Health Minister Greg Hunt said 1.3 million jabs were administered in the past week, and that should reach 2 million a week by October, when supplies of Pfizer and Moderna were increased. He said both vaccines were likely to be approved for kids over the age of 12 by the end of the year. The federal government faces its worst electoral position since the Black Summer bushfires, with growing frustration over the vaccine rollout and lockdowns hurting its political standing. Prime Minister Scott Morrison's personal approval ratings have fallen into negative territory, according to Newspoll in the Australian newspaper. Support for his handling of the crisis is 48%, down from a high of 85% in April last year. On a 2-party preferred basis, Labor is ahead 53% to 47%. Auction clearance rates in Sydney remained high over the weekend, around 80%, albeit off far fewer sales, but the clearance rate in Melbourne dropped sharply to around 70%. Canberra remained strong at 87%, Adelaide at 78%, and Brisbane at 67%, according to CoreLogic. The Reserve Bank has cut its growth forecast for this year, but repeated that it expects 2022 to grow faster than first forecast. On the back of lockdowns down the East Coast, the central bank has pulled back its forecast and believes the current quarter will be negative. The bank expects underlying inflation to push into its target band in late 2023, while the unemployment rate is tipped to fall to 4% by then. Governor Philip Lowe, appearing before Parliament on Friday, called on Australians to get vaccinated, saying if the health position deteriorated, a double-dip recession wasn't out of the question. Meanwhile, economists from National Australia Bank have said the economy may have gone backwards during the June quarter, which was affected by lockdowns in Melbourne. The official figures for the quarter are due out in 3 weeks, and a negative would mean the economy will fall into a recession, given the current quarter will also be a contraction. BHP will spend more than $1 billion on oil projects in the Gulf of Mexico, dashing speculation that the big Australian is considering pulling out of oil and gas. Both projects are in the Gulf of Mexico. While oil looks set to stay in the portfolio, there's speculation around BHP's coal assets. Like other miners, BHP is under pressure to reduce its carbon footprint. Its share price closed down nearly 2% on Friday. Media giant News Corp reported a net profit of $389 million for the last financial year, the best since the new company was created back in 2013. The growth came from the group's digital real estate services, book publishing, and Dow Jones. The subscription video services business, which includes Foxtel in Australia, increased revenue by 10%. News Corp's share price jumped nearly 8% on Friday. Meanwhile, online property group REA posted a net profit of $313 million, triggering a 5% drop in its share price. REA is majority owned by News Corp. The result was strong on the back of the booming property market, but the outlook was much more sanguine. Two very well-known hotels, Novotel Sydney and Ibis Sydney Darling Harbour, are up for sale. The owner of both, the Abu Dhabi Investment Authority, wants to divest the hotels that overlook Darling Harbour, and they're expected to fetch about $500 million. In a similar vein, Sydney Airport will start work on a new hotel precinct next to its domestic terminal, confident that post the COVID pandemic, air travel will return strongly. And a final word on the Olympics. What a great show. 2 weeks where we didn't have to think about COVID all the time. Congratulations to all the participants. To Channel 7, great coverage, particularly the streaming service. 20 million Australians tuned in. And to Tokyo and Japan, who managed the COVID crisis incredibly well and presented a cracking games. Up next is our daily interview, and my guest today is Elise Kennedy from Jarden Group, an expert on the Aussie tech sector. Tech stocks had a massive week last week with the proposed $39 billion sale of Afterpay, the largest deal in Australian corporate history. Elise takes me through what it all means for the sector and where investors might find opportunities. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Then stay listening for my chat to resident economist Stephen Koukoulas about what happened in the economics world last week and what's coming up this week. It's Monday, the 9th of August 2021. I'm Sean Aylmer, and that was Fear and Greed. Enjoy your day.